Hello, everyone. Happy Tuesday. How's everyone doing? Good morning, John. Let's see. Good morning, Sterling. Thank you for putting in the news and the numbers and the earnings. Good morning, Heinrich. Good morning, Patrick. Yes, happy tax day. Can we do something about this? Can we shift to a different tax model? Because this one's a bunch, and everybody talks about it periodically, and then nothing ever happens. Can't we go to a flat tax or national sales tax, please? Good morning, PMG. Good morning. Just like, can't we get rid of the time change? Can we just do some simple things? Good morning, Tony. Bank of America was a beat. Citigroup was a beat. Johnson & Johnson was a beat. PNC was a beat miss. So thank you for putting in those. Good morning, McRangers. Good morning, Daniel. Good morning, Royal Palms. By the way, speaking of earnings, worst net earnings revision since 2020. So, this earnings revisions, this is not a positive sign. So just keep that in mind. Now, we still trade the patterns, but this is where I will use fundamentals for a macro backdrop. On this rally, there's lots of companies revising down. And then they still might beat, but they're revising down to be able to beat. And you see where earnings fell off the cliff with the pandemic. And look, we're breaking down even more. So even on this rally back, the only reason I'm bringing this up, we still have patterns we got to trade, but just don't lose sight of the markets. Daniel agrees with the flat tax. That's fine. I mean, I just want something different than what we have, because you should not have this many pages of tax code. So, hello, Options 22. How are you today? Thank you again for tuning in. All right, so we sort of showed the back row breakdown of earnings revisions, and then companies still beat, but they're not getting pops like they used to. All right, we also had export prices pretty much flat. Import prices for March is going to be interesting to see this for April, but import prices for March dropping 0.1%. New York State Empire Manufacturing Index, better than prior, but still negative. Export prices year over year up 2.4. Import prices only up 9%. Red Book still hanging in there, down from prior, but 6.6 is a strong reading for that. People are still spending money they don't have. Buy it now, pay for it later. That's going to be an interesting thing when that all blows up. We got Barkin speaking, and we got Cook speaking this evening. Other than that, it's a very quiet day. We've got the numbers out of the way. We only have the Trump factor and Barkin. That is it. Hello, Charles. Good morning, Harold. Good morning, Jacob. So, we are also in an inside day. Volatility is dropping. We'll go over what I'm looking for. So, just do a quick there we go. It refreshed itself. There we go. Apple down slightly. Netflix up, saying they had something yesterday about $1 trillion of revenue or something. I don't remember exactly. Bank of America is up off their earnings beat. They were pretty beat up. They're like trading at 11 something PE. So, oops. Even with this, I mean, I would expect a little bounce in them. Groups, let's just do a quick refresh. We have comm services and financials. Financials, no surprise there with the earnings, but the most negative is real estate down 27 basis points. The most positive, comm services and financials up 31 basis points. Very quiet morning. Fed Watch we're back to 81% for the pause in May, and then we have 3 cuts. 4th cut next January. Fear and greed, trying to climb out of extreme fear, trying to climb out of there still. Schiller PE. 33.48. So people who think the market was pullbacks made the market cheap, it's not cheap. It's not cheap. So we even got down. Look at the pullback. Even there's a .com pullback. You got back down to just above 20, and then in the Great Recession we got down to, what was that, like 14? So this market's nowhere near cheap yet. Just keep that in mind. Again, from a macro perspective, that does not mean we won't have rallies. But even on a rally to the most recent highs, the market's just hanging in at super expensive with firms cutting guidance and cutting earnings forecasts. Do you have Albertsons? Did I miss that, Sterling? Did you have Albertsons? I did not see them this morning. United after the close, Interactive Brokers, JB Hunt. Tomorrow morning, keep an eye on ASML. What else do we have here? Yeah, thank $1 trillion for 2035 for Netflix. I thought I saw something about that. Thank you for putting that in. Good morning, Christoph. I think I got everybody. I hope I didn't miss anybody. All right. All right. Where do we sit? So, again, we've paused at the look at this is why I track the rotation zone. Look at us against the upper end of the rotation zone. Running into it there, running into it there. We pulled back yesterday, running into it, and we're still coiling. We're still coiling at the first target and the rotation zone. The probabilities are still, we're still against the rotation zone, so it's not the super strong probability double bottoms, but this has decent probabilities, else I wouldn't be pointing it out. So I'm still watching. Now, intermediate, I'm paying attention to yesterday's highs and lows. Yesterday's low in the S&P, 53.91. We break down below that. I'll be watching for the pullback. Yesterday's high coming in at 54.97.75. We break about that. I'm going to watch for a retest of the high from last Thursday, and then we break above that. Going to be watching to complete the next target in the double. If you want an intermediate target to the upside, I'm looking at about 55.85. On a pullback, going to be keeping an eye on two key levels if we do break down. Again, it's a very quiet day, and we're basing right at the prior peaks. We're basing right there. The two levels I'm going to be watching. If we do break below the 4-hour rotation zone, which is now the rotation zone I'm focusing on, if we do break below that, I'm watching for about 53.60 and then the same level as major support, 52.70 area. Oh, I did miss Albertsons. Thank you. I missed it, Sterling. My fault. Was a beat. Thank you. Albertsons was a beat. So, thank you for putting that up there. Same thing, NASDAQ. Paying attention to yesterday's low, 18,737.50. Now, this is a little more heavy lifting to do, but look at the top. It got above the rotation zone a little bit, collapsed back down. Remember, the close is what counts. We can have spikes above the rotation zone, but the close is what counts. At the rotation zone, rejected from the rotation zone. In the rotation zone, rejected. So, if we do break down, let's go through that one first. Two key things I'm watching. Minor support coming in 18,700. Major support now 18,350. If we do break below that, then you're looking at 17.9. Now to the upside. Yesterday's high is very, very key on any rally, 19,256. That's also at a very significant level, the prior breakdown level. The high from the bar, the bounce back bar on Wednesday the 9th. So that's key, but the next target above there, we're looking at the double target. Again, probabilities are still for an up move. 19,581. And then the key target area now with basically the 50 declining for me is 19.9 to 19.988. So that's where we sit right there. Yep, it's dead today. So far, it is dead. That doesn't mean you don't have to prepare. Dow also basing right at the highs, the most recent highs. So we break up. Remember, you're still also in an advanced clear path. You break up, the next key target is 41,725 area. Okay, and then 42,416. First level on a breakdown, again, paying attention to the 4-hour rotation zone, but we break below that. I'm paying attention to about 40,130, and then the major support area about 39.5. Russell, we're not basing at the highs. We have not even hit the other side of the rotation zone yet, but I'm still paying attention to yesterday's high and low. If we take out yesterday's high, I'm looking for an area right around 1923. Key support, if we break down through yesterday's lows, about 1843. The VIX, still elevated, but continuing to pull back actually to the prior breakout zone. But yesterday closing below the 62.5, so probability-wise, this also favors the VIX to continue to drop. And the markets to continue to potentially have another bit of strength in them, at least another potential pop higher, unless something comes out of nowhere, which can always happen in these kind of markets. Always happen with these kind of markets because we have the unknown with the whole Trump administration and what shoe could drop next, because that's what we're in. And I'm not saying that's a negative. I'm just saying that that's the environment we're in. Who knows what comments can come out. DAX, still paying attention on the next rally. The top of the rotation zone has not been able. This was a very sloppy double, remember, but has not hit the first target yet. So I'm watching intermediate wise 21,610. Key support coming in right around this 21,000. The notes. I mean, technically, it was a little percent beat buy yesterday with cycle. So I'm more looking, we're back in the consolidation range. I'm still watching for potential rollover plays or bounce up plays in here. The only thing that would change my mind is if we triggered this still potential double top on the micro yields. We've come back to the very key breakout level. I'm still going to be watching for another rotation coming up. This actually also was a little minor percent B sell, not confirmed by an RSI thing I'll talk about in the future. So that's where we're sitting there. Dollar index, by the way, we're right at the cusp. So unless this gets a move on in like the next couple hours, this is going to be off the table. The double will be. Not a potential bottoming pattern, but the double will be. Why? If we count between the two things, it's 1, 2, 3, 4, 5, 6, 7. Between the lows and the lows, we extend that 1, 2, 3, 4, 5, 6, 7. So if this bar does not trigger it, it's off the table. It's too far extended to the right. That does not mean we won't potentially bounce. I'm still watching for that bottoming formation against the 87.5 harmonic, but I won't be able to use double targets. My first target would be on a bounce to this a gap fill and the rotation zone. No double target, but the first target's still virtually the same. Crude just coiling up in a pattern here. There's not a great pattern. Still, we have my support level I'm looking at is about 50, just above 59, and key resistance is 62.70. Other than that, still coiling. If the markets break up, we'll probably see a little bounce getting through the rotation zone and closer to the other side, getting towards the bottom of the rotation zone and breaking above the bottom of the rotation zone and getting closer to the top of the rotation zone. There's what I meant to say. Gold, still now basing at recent highs, letting the rotation zones catch up, especially the daily. So if we do break higher, 3,300 is the next minor key level, then 33.36. I'm hoping we get the stronger daily pausing bar today and don't break above that so I can confirm the harmonics. Very key support, still back at 3,200. Copper, again, basing at the first target of the double, pulling back a bit, but still at least yesterday's inside bar. So we're going to be watching yesterday's high and low. For short term, for the bigger term picture, we still have the double. And we haven't even hit the 50% retracement harmonic yet. Yen, also same thing as the dollar index. This is 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So this is now off the table. So the yen for me, in order to do anything, has to get above this breakdown zone. Since I don't have a double, it now has to get above this breakdown zone for anything to the upside. Other than that, we're right against that 87.5, still watching for a potential bottoming pattern unless we take out Friday's lows. And then I'll be watching for a potential retrace to the September lows. Euro, again, not much to talk about here. Basing near the most recent highs, but it's just pretty much the inverse of the dollar. There's just not a great setup. Spiders, again, there's not a lot of great setups besides these doubles that have already triggered. Spiders, a little gap down today. So first, minor gap down. Yes, minor thing would be to yesterday's gap, yesterday's close, which is 539.12. Then we have yesterday's open reversal. 544.05 is the next target. We get above there. Over the next couple days, we're looking at 551.80 area. Then it's the final target on the double and a potential gap fill. To the downside, you have major support right around 532.50 to 533. The Qs also trading slightly up above yesterday's close. So on any negative would be a gap fill to yesterday's close. And then you have major support coming in at 454. Key target still was back to the second target on the double, which was already hit, 467, and then 476.46. And remember, you have a gap fill to 476.15. So that's the final target area on the Qs. What else? Hey, Andrea. It's so depressing having to hand over 15K of my hard-earned money just to watch many others get that much in return and send it on vacation or material items. I understand, Andrea. Good morning, Legion Reaver. Good morning, Anissa. So that's where we stand there. Bitcoin trying to get to the second target of the double. So that second target is still about 80. What is it officially? 88,325. And then could be a return to the 200 area and this prior topping area about 88,000. Tesla, you still have, now remember, if this weekly were to trigger, it is pretty risky because we have earnings next Tuesday. But that still pattern is still technically in play. By the way, NVIDIA has a little mini potential double top, may never trigger, but keeping an eye on that. Lots of positive news coming out on NVIDIA, but has not been able to sustain any more of a rally. Going to be keeping an eye on NVIDIA and Avgo's potential double tops. Not saying they're going to trigger, just keeping an eye on them. What else? That's really about it. There's not much to talk about unless we get a move on today. Now, what else? You know, it could still be a quiet day unless we get something riling up the markets. Tomorrow, keep in mind, we have Powell speaking. So, and we have retail sales in Powell. Tomorrow is going to be the big day, the biggest day so far. And remember, holiday on Friday. And shorter trading weeks actually favor upside moves also. You want Apple options 22. Apple, again, the key reversal, yes, or just a key coming up to the breakdown zone. I'm now watching for a potential gap fill to 198.15, but it's got to hold this support. Longer term, I'm still negative on Apple. Longer term, we return to the weekly rotation zone. If it starts breaking down this key support, I'm going to be watching for, again, continued pullback moves. If we do bounce up and hold that key support, the major level on any bounce is 223.38. There's a 220 to 223. Up there, we have the hooking over 50. We have the top of the weekly rotation zone, and we have a massive breakdown zone on the weekly. Apple still, you know, you're going to have stuff pulled forward because everybody rushed out who needed to buy an iPhone, bought an iPhone before the, you know, and they flew in like 6 jumbo jets of iPhones before all the tariffs hit. But, so Apple, that's in the short term. Would not be surprised to see what that pull forward for them beat on earnings. And then rollover plays. Overall, I'm watching for rollover plays in them. But if you're looking for something in the short term, it's really got to hold this key 200 area support. If the ES goes up to 52.70, all right, great. Thank you, Options 22. Let me get back to Jake. Thank you. If the ES gives up the 52.70, could that be a proper conservative stop for the double bottom pattern? If it gives up 52.70, yeah. If it starts, I'd want it either. If it starts breaking down below this, I'd want it to follow through with a close. You see here how many times it's dipped below that, but there's buying pressure. There's buying pressure just below this. If you wanted a conservative stop, I'd be looking at more at the 50% on a trade through basis, but on a closing basis would be that 52.70. If it starts closing below that level, yeah, you could use that as a stop. Yes. A lot of Christians prophesying on Easter crash, pretty crazy. It really didn't start the past month or so, but what was that it? Again, I work off patterns, not prophecies. So that's where we sit. Again, bigger picture. Even if we continue a rally, probability still slightly favorite. We are getting to daily cycle top areas. That's a little concern, but weeklies are still climbing. We can easily keep in mind the bigger picture. We have yet to return to the weekly rotation zone. All right, we got a lot of key stuff overhead. So even on a continued rally, I will be watching. Remember, the capitulation bottom I talked about from last week is not a long-term capitulation bottom. We can easily see another leg down at some point. So that's why I'm keeping an eye. But in the short term, I got to play the probabilities. Okay. Any thoughts there? Is stalled out right at 50% retracement? What a... let's see. I mean, it's right here. I'd be watching, again, still personally for rollover plays, unless it can break above this 105 area and follow through about 106.77. If it closes above there, that's the only thing that would shift me short-term bullish, watching for a retest of the most recent high area. Other than that, let's see if was there any shorter-term pattern? No, it just filled a bunch of gaps and returned to its major breakdown zone. So this, in between the 50 and the 62.5, is very key rollover pattern. So again, the only thing, I'd be patient sitting on hands. If we started breaking back below about 99, I'd be watching for the breakdown play. If we get above this 105 and follow through with a close above 106, that would shift the probabilities and have regained the prior breakdown zone and potentially turned the resistance area into support. Other than that, again, this is just a bounce back move so far for me in OKTA. All right. With that, nothing else I need to say. We'll just peek at the S&P. Doubt it's done much. It's done absolutely nothing. So just into the open, your key support level is about 54.08. And the key resistance level is about 54.64. So I'll be watching those to potentially hold support resistance. You start breaking above 54.64, then I'll start watching for a potential move back up to retest the most recent high areas and the first target. With that, I shall talk to everyone later. Thank you for tuning in. I'll see you all tomorrow. Bye for now.